All right, nice to have you. Okay, Aminata, nice to have you. Luga, nice to have you. Madam Vera, nice to have you. Miss J, you guys are welcome. All right, okay. It means you all can hear me clearly. So today, I'm super excited to have you all on this call. We have been doing pretty well. Okay, we have been doing pretty well. Results has been proving that I've been doing well. I'm seeing your charts, how far you guys have been improving. The latest I saw was a guy from South Africa. He sent me his chart, his markup. I was so impressed. I was super impressed. And when I asked him, he told me that he learned those markup from what I used to give out on the channel. That's Fire Pips channel. So I'm super excited to have you all here to learn new skill. And we all know trading is a skill set that can change the way we live, that can change the way we think, the way we react to things, can change our lifestyle if we're learned. Okay? All right, so I believe the mic is so clear from this end. So today we'll be going through, we'll be doing a weekly review. We'll be doing a weekly review. If your sound is not okay, please kindly set it up on your end. Make sure the sound box, like the microphone, is toggled on. Okay. Once that is done, then you should be fine. And everyone else can hear me. Okay. Thank you, Wizzy, as you helped us with that. Thank you. All right. So today we are going to be going through some pairs, weekly reviews on any pair you're going to drop. So you can drop any pair on the chat box. But for now, I'm going to start with GBP JPY. So pretty much what I do is just basically price action. I look at structure and I trade structure. You can see my trading view, no any indicator, Merlin, no indicator on the charts. Just make sure you can see the candles properly, relate to the candle, listen to what it's trying to tell you, look at what it's trying to tell you, then you react. Okay, remember, we do not take actions ahead of the market, rather wait for the market to take actions, then we react. That's the only way we can make money. We follow the big boys in the market. All right, so I'll be doing a top-down analysis on GBP JPY. So before I finish this analysis on GBP JPY, you can drop a pair you want us to look at. So the first person to drop a pair, that will be the one that we're going to look at for. So the first person to drop his pair, that will be the next rather to look at for. So currently I'm on GBP JPY, all right? GBP JPY, okay, Euro USD, GU, EU, okay. First, let's go on GBP JPY. First, let's go to the monthly time frame. So we're going to do a top-down analysis all right. So GBP JPY actually the chart on GBP JPY started since 1993. You can see that. You can see the whole move that happened so far. All right. So very clear, so clear, so clear. So now all we need to do is to start looking for chart patterns, start drawing our trend lines with the help of trend lines, okay? So the first we are going to do is map out what is happening currently in the chart, what's happening, what's the move like, all right? We have got this move here, all right? So, and here is another one at the bottom, right here. You can see upon the bounce, whenever candle gets to this trend line, you see it bounces off that zone. Okay, we have that on the monthly. Please, I'll reply to our chat once I'm done with this analysis. So you can see here is an impulsive move correction to at this point. Okay, let me bring out the annotation box. Okay, here is an impulsive move. Okay, and here is a correction to the upside here. Another impulsive move, then a bigger correction, then expecting this still correcting, we're expecting something like this, and it goes to the downside. So this is what we are looking at for here. Okay, so let me just clean that out. All right, with that said, we have to downsize this to monthly. You can also see, you can also draw a trend line here. Okay, you can also drag a trend line to trade this. If you want to break this, we have 1, 2, 3. Okay, then you break to the downside. So that's what we're anticipating. Okay. Right, so now we have to go to, now basically what we just did on the monthly is to look at how the bigger, to look out for the bigger chart patterns, okay? The bigger chart patterns. So it's now on the weekly. I'll try to break it down to see what has been going on. So there are always trades in the market. That's what I keep telling you guys. There are always trades in the market, always trades every now and then. Here are chart pattern. If only you can just locate these chart patterns and you trade them the right way. There are always trades in the market, always trades in the market for you. Okay. This falling wedge is to tell you that the downward move is to end soon. Remember, whenever there's a falling wedge. Now, for those that use MACD that spots divergence, you find out there will be a divergence. If you're using MACD, you find out that there will be a divergence at this spot. Okay. Now let me just prove that with the help of okay. I'll just do that with the help. Okay, TDI indicator. I believe that will help us with the help of TDI indicator. Guys, please kindly mute your mic. Kindly mute your microphone, please. All right. All right. So on the weekly, we have to downsize it. Here's how you need to trade. So once you figure that out on the monthly, here's another chart pattern you need to spot. Okay, upon the break, trade, guys. Upon the break of all these trend lines that I'm trying to draw, upon the break, you can wait for a retest sometimes, but you can as well enter aggressively and trade directly. Okay, sometimes I do not wait for a retest. I have my first entry upon the break. All right, so with that said, now here's one thing I want you guys to understand. Here's what we call impulsive move and corrective move. Impulsive moves, they do not have, impulsive move does not have a particular structure. Okay, we have impulsive move, and we have corrective move, impulsive move, corrective and impulsive. So with this we can call this a downtrend. Okay, impulsive move does not have correction. It does not have a structure. Why correction does have a structure? Like most of the times we see a structure like this. Okay, this is an impulsive move. Remember, it's an impulsive move right here. Impulse. Why this is a corrective move? Corrective. Okay. All right. So now most of the, you must have heard this from professional traders. Most of the time, markets always move correctively. Market moves in a ranging. This one, you get to see this more than you see this. All right. Market move more correctively than it move trending. Okay, it move correctively than it move trending. So for you to be a successful trader, you have to understand these corrections. When it's over, when it's starting, and how to take advantage of it. That makes you a very good trader, an expert trader. All right, so there are various types of correction in the markets. Okay, we have flats, we have flat correction, we have regular, a lot. And there are so many other people, they can call it different type of names. So today I'm not here to teach you the various type of name. What I want to teach you is how to note them in the market and take advantage, make money with them in the market. That is what this webinar is all about. So with that said, now you should understand where I'm coming from as I'm doing this analysis. Well, okay, the reason why I'm getting all of those. All right, now you can see this further breaking it down. So here are trades. There are more trades in the market for you. More trades. You can see upon this impulsive move, here is a corrective move. Upon the break of this candle, upon the break of this trend counter trend line you drew here, you trade long. Upon the break of this counter trend line, here is another impulsive move here. Upon the break, you trade long. This is another impulsive move here, another impulsive move. Okay. So remember, we're not looking for impulsive move. We are looking for, we want to spot the corrections. Here's the correction. Upon the breakout of the correction, you trade what? Direction of the trend, which is still long. Okay, all these patterns that I'm spotting here, they all have names. Remember what I said earlier, I'm not after the name, we're not about the name, we're looking at how to spot them and trade them correctly. Okay, upon the break, you trade long. Okay, you can see. And here, you remember this was the trend line we drew from the monthly. If you guys still remember, is the trend line we drew from the monthly. Upon a touch of this trend line, what happens? It bounces down. So you want to draw another bigger trend line from your weekly, okay, touching at least 2 points. You can see upon the break of this trend line, trade low. You can see when trend line was broken, what happened? We had a retest and boom, price went to the downside. All right. So let's speed this whole thing up a little bit. Now let's go to daily. All right, we are downsizing this whole thing. You can see there are trades everywhere. Now we are no longer looking at too far at the history. Now we are trying to make our focus on what's happening currently on the chart. Okay, on daily you can see more corrections and more impulsive move. Like right here we have here. Upon the break you trade shorts. Okay, upon the break right here you trade shorts. Upon the break here, you trade shorts. Now, this thing might not make a whole lot of sense here on daily. When we get to the entry point, I like to do my entry from 15 minutes. For those that are a member of my channel, you see my entries are always on the 15 minutes, but I make sure I do this top-down analysis from the monthly, weekly, daily, 4 hours, 1 hour, and do my entry on 15 minutes. Okay, why do I do my entry on 15 minutes? I do my entry on 15 minutes because you get to have much earlier entries on 15 minutes than you have on any other time frame. So that's the reason why I have my entry on 15 minutes time frame. Don't worry, I'll just go through the questions once I'm done with this whole analysis. But right now, most importantly, you have to see these chart patterns with your naked eyes. Very, very crucial. You have to see impulsive move, correction, impulsive move, correction. This is still a correction. We have A, B, C, correction. Okay. Now, I won't want to be going deep in order not to confuse some of us here. We have got what we call ABC correction, Elliott's corrective pattern. We have here. Here's a very good example of one ABC. Upon C, it flushes down. Okay. Upon DC, it flushes down. So I'll just delete that because you don't really need that. Just understand your you need it, but in order not to confuse you, because that's really deep. You have to understand. You have to take a course on Elliott wave theory. So if you need a course on how to determine all of this, PipSub is a place you would want to be. Okay, I'm going to be dropping a link, or you can just private message me on my Telegram. I'll tell you more about that. PipSub is a place you'd be. I'm an educator there. We're going to be teaching you charts, how to recognize that. We're not going to be teaching you indicators. Okay, you are your indicator. We're not going to be showing you on how to use indicator. We're not going to be showing you moving average or any MACD. I want to show you how you can be your indicator for yourself. Okay, with that said, now let's downsize this to 4 hours. Going to the 4 hours, you can see the whole thing begins to make a whole lot of sense to you. First, what you want to do, you have to make sure you adjust the trend line. Since you drew them on higher time frame, they might get, when you downsize it, they might not make a whole lot of sense. So you just have to make sure they make sense to you, right, by just readjusting that. Okay, all right. Now, here are more opportunities for you to trade. Okay. Yeah, upon the break, you should trade long. Okay. Boom. You can see impulsive move, corrective move. Upon the break of this counter trend line, trade long. Now, you can see currently on a bigger time frame, we are on 4 hours, we are on a channel, right? If you would agree with me, what kind of pattern is this? This is like forming a flag pattern. Okay. Remember what flag patterns are? Flag patterns are somewhat like this. Okay, like this, up move and forms like this. Okay, so go up, so just form of a flag, so that's why it's called flag pattern. All right, so let me just clear all that. So that's why it's called flag pattern. So this is forming a flag pattern on 4 hours. So if we had not done a top-down analysis from the monthly, you wouldn't have known what's happening here. So now let's take it to 1 hour to make more sense to us. Now pay attention to this, guys. Pay close attention to this. On 4 hour, you determine the trend on the 4 hours. This is for day traders. This strategy is for day traders. This style that I'm about to explain. On 4 hours, you determine the trend. While on the 1 hour, you determine the current trend. You all will agree with me that there are times that the trend on the 4 hours will be different from the trend on 1 hour. Okay, That's because of their time frame. It's different. 4 candles on 1 hour time frame makes 1 candle on 4 hours. So hence, that will bring some difference, some variations in trend. But that does not mean 1 hour trend will override 4 hours. No, 4 hours trend will always override because it's bigger. Okay, now what you need to do is determine your trend on 4 hours, what the trend on 4 hours is saying. Now, when we're on 4 hours, you could see it was in an uptrend, right? It was in an uptrend on 4 hours. You can see it's a big uptrend. But what we saw was this was only correcting. Now, trying to downsize it to the 1 hour time frame, you can see this might just change your mind that, oh, it might just change your mind, okay, this thing is trying to come down. It's going short. No, it's not going short. The actual trend is still up. So be very careful. So what I do is I determine my trend on 4 hour, then I go to 1 hour to determine the current trend. Okay, once I determine the current trend on my 1 hour, I go to 15 minutes to pick my entries. I either trade long or short based on what I see. Now let's go further. On this channel that we spot now, we're going to be working with this channel. This is what is relevant to us currently. On this channel, this is what's relevant. Now, just pay attention to this because I'm not going to be explaining so detailed on all of that as I'm doing here on GBP JPY. Okay, so I'll take this trend line. Let's spot more trend lines. You can see upon this channel, when it got to this point, it retraced to the downside. When it got here again, it got bounced like that, like that, like that. Now, how do you trade in this channel? By connecting your trend line. Connecting trend line will allow you to trade successfully in this channel. Okay, you have one there. This is how I trade my accounts every day. I'm sure you all saw the release I did of recent about how I made 300% in three months. So more than 300% in 3 months. I'm still going to show you that on my phone before we close this webinar. Okay, I've done an account of 15,000 to more than 41,000. Okay, all right. So you can see upon the break you trade. Upon the break, guys, trade. Upon the break of this counter trend lines, you trade. You can see this. Upon the break, you trade. Okay. Now, this whole thing might not still make a whole lot of sense. Now, let's go to 15 minutes where you have to pick your entries. Okay. Perfect. So, now here's the whole trick. Once upon the bounce of this downtrend line we drew from, remember this bottom trend line is from the 4 hours. Upon the bounce of this point, you should know that we are headed to the upside since it's ranging between the upper trend line and the lower trend line. Okay, it's ranging between that, it's consolidating. So for you to catch those moves, okay, you have to pay attention to those lines. So upon the bounce of the trend line below, you should wait for a price action. Signaling is a buy opportunity. So once you see any price action, you keep buying. Okay. First, it's fine to miss this first move. Let's say you are still an amateur, you don't really understand how to trade. It's fine to miss this first move, but guys, do not miss this move. Do not miss this one, because all you need to do is to draw your counter trend line. Upon the break of counter trend line, trade long. Okay. Then let's say you break even and your stop got hit out here. No problem. As you come down here, you draw another counter trend line. Upon the break, guys, you trade long. That's how you should do it day in, day out. That's how you should trade all the time. All the time, guys. All the time. This is how you should trade it. All the time. Okay? Upon the break of this, you should trade long. You can see this point. Okay. Upon the break, trade long. Okay? Upon the break here, trade long. This is another big corrective move, corrective structure. Time will not permit us for me to start explaining all of these. These are big Elliott wave theories. Then upon the completion, boom, to the upside. To the upside, okay? So I'll just pass this Elliott wave structure. So now how do you know this move is about to, the downside is about to come? You see, upon the touch of this upper trend line we drew from 4 hours, now the next thing, you just pull up your trend line. That's all you need. Once you pull up your trend line, just know this is a corrective move. After the first push there, this is a corrective move. After the first push here to the downside, Here's the first push. Now we have a corrective move right here. Then upon the break of this trend line, you trade. Here is another corrective move. Okay, trying to break out of this trend line, we drew, touching here, and touching here. Upon here, it definitely making noise. Here, it's forming a support. So once you see a move right, a noise right here, see this. Sorry, you see this kind of corrective move here. Just drag your trend line. Then upon the break, you trade shorts. Here is another corrective move. Upon the break, trade shorts. Upon the break, trade shorts, guys. This is all you need to do day in, day out. So now, what is the current market condition? How should you trade once the market open? What should we be looking out for once the market open? For me personally, what I'll be looking at for now, let's go to 1 hour to determine the trend again, the current trend. Now, the current trend, what would you say the current trend is? It's bullish, yes. The current trend is bullish, but on 4-hour time frame, we all know it's still bullish in the longer time frame because this is a bullish move, all right? This corrective bullish. So on 1 hour time frame, since we already have a bounce off this, of this trend line. Now here is another point we are expecting a touch. We already have a bounce off this trend line. Now here's another point we are expecting the price to get to. So all you need to do, wait for a candle, a corrective move here. Upon the corrective move, you let it get to this point. Okay, you ride it to this point. That's what you should be waiting for. We are waiting to trade long on GBP JPY. All right, pending on the open of the markets. That's number one. And secondly, you also have another. If you drag a trend line like this, you see there's a breakout right there to the upside. So GBP JPY, my opinion is still long once the market open. So now back to the messages. Oh, I'm fast. Sorry if I'm too fast. If I'm too fast. I'm doing a recording. You can always watch the recording. Sorry. Okay, now the first demand here is someone is saying I should do analysis on Euro USD, GBP USD, and gold. All right, perfect. So I'll go with Euro USD first. Euro USD. Euro USD, where are you? Like I've done analysis there because that's my major pair. All right, you guys know I trade Euro USD a lot. Okay, here is the analysis there. Euro USD and GBP USD, they are my major pair. They are the only pairs I trade for now. Okay, that's for major pairs. These are my major pairs that I trade. All right, so now let's go to the monthly. Let's see what is happening on the bigger time frame. All right, you can see what's happening. First push, correction, second push. Now you can see it's coming down, but the actual move is to the upside. Okay, this is for the monthly. You can see it's forming a channel on monthly, weekly, perfect. You can see what's happening on weekly. Okay, this is basically much what we need to see. This is all we need to see. You can see here first. Now, if you're not understanding anything on this webinar, make sure you get this and get it clear. Impulse and correction. Now here is an impulsive move. Here is a corrective move. Impulsive move, end of this whole move. This is showing a reversal. This pattern is a reversal pattern. Upon seeing this pattern and you are seeing it upon this trend line, you should know the market is about to reverse. So once the market reverse now, is now bearish. This bearish impulsive move. Now you have another pattern here. Okay. The next we are to have another drop to the downside. So on weekly, what are we looking at for? We are looking for a clear drop on Euro USD. A clear drop on Euro USD. So with that, now let's see how far that drop will last. How far where it will get to. Okay. So by downsizing it to the daily time frame, you can see everything is making a whole lot more sense. Whole lot of sense. Okay. So upon the bounce off this trend line, we are still expecting one more drop to the downside on Euro USD. Still expecting one more drop to the downside for this week coming. One more drop to the downside. Okay. Look at the 4-hour trend. You can see trend lines. I already map out all of these trend lines. I will just screenshot this and send it to the group so you can have a look at it. Let me do that to, I'll do that on 1 hour time frame. I'll do that on 1 hour time frame. Still expecting one more drop to the downside. On Euro USD, I'm still expecting one more drop to the downside. Okay, very exciting. How do I count this drop? Perfect. How I count this drop is from, just as you see on monthly, once a correction is not complete, you should know. We have ABC and 1, 2, 3, 4, 5. Just to this an advanced stuff. It's advanced. We have something like this, that is 0, 1, 2, 3, 4, 5, and boom to the upside. This is impulsive. Okay, so this is how I know. This is how I know if it's not complete. This is exactly how I know if the move is not complete. So to understand, it's actually very advanced. If I start with Elliott wave and the theory will not leave here in 1 hour time. So it's really big. Okay, let's keep this webinar short and concise. Just understand this. Where I'm expecting it to drop to is this point. I'm expecting it to break out and come to this point. Okay, once you break out to this point, it's going to make consolidation like this and finally drop to this point before the final move to the upside. That's what I'm looking at. That's what I'm looking at on the monthly time frame. So if we are to downsize this, but within this whole move, not that they are not going to be bullish moves, though there's definitely going to be bullish moves, but I'm just telling you what I'm looking at on the monthly. They're definitely going to be bullish moves, but the bullish, they are going to be very small. So you're going to look to buy more. You are going to look to sell more. The impulse should be on sell. Impulse should be on sell. But currently on 1 hour time frame, let's see. Okay, now, if you're not a swinger or you are not a position trader, all you need to do, and you're a scalper or you're a day trader like me, all you need to do, you don't have to stress yourself over this monthly and weekly. All you need to do, just drag your trend line over. Upon the break of the trend line, trade short. Can you see this? Upon the break, once that is done, you cancel the trend line. Once that is done, you want to remove the trend line. You remove the trend line. You draw another one. Once this move is, the whole move is done, you draw another one like this. Upon the break, you trade long, like that. Once you're in profit, you break even. Immediately you're in profit, break even. That's how to protect your money in this market. All right. If you're expecting a class on waves soonest, no problem. Make sure you're part of PIPSUB. All right. PIPSUB is a training community where we teach people how to trade wave. We train people how to understand the chart without looking at the indicators. So with that said, now let's go to GU. I will just screenshot this. Now let me show. Now here's a breakout. It's going to go up small. For GBP USD, it should go up slightly small. Upon the open of the market, it should go up. Okay. Sorry. This is Euro USD rather. Euro USD. It should go up a little before you start seeing the move to the upside, to downside rather. So now the next one is GBP USD. GBP USD. GBP USD is doing something similar to Euro USD. See, I already have my markups here. Already break here. Upon the break of this guy, I trade these. Okay. All right. Okay, you can see this. This fall is falling correctively. You can see the actual move for GBP USD should be bullish. The actual move. So what should you do? I already did this analysis from monthly to this side. All you need to do, just draw your trend line. Draw your trend line. If you are not a swinger, draw your trend line on 1 hour, go to 15 minutes and pick your entries. That's what I'm doing. For me, once the market open, I should be shorting this pair. I'll short this pair once the market open. You can see this is also close to psychological level, which is 1.2900. So 900 is at this point. Look at my price here. Look at this price here. Here, look at here, my price. That's 12900. It's a psychological level. You can see how it gets to psychological level and it wants to reverse to the downside. Moreover, you can also see a counter trend line break to the downside. Okay, so once the market opens, do not sleep on it. You should short that pair. Short that pair. All right. So that's my analysis on that. And let me put an arrow indicating there. Then I'll screenshot it and send it to the group. As the week go on, I'll still be giving my markups. If there's any change in all this analysis, if there is any change, remember we take actions. Okay. Yeah, then it likely go up. It will likely go up. Move to the upside. Okay. So I'll just screenshot this and send a link to the channel. So if you are here, you're not still a member of Fire Pip channel, you should make sure you join it. You should make sure you join the meeting. Okay. You give trade signals almost every time. Now this is taking a whole lot of time. Okay. Right. All right. So on gold, the final one. I know gold has been moving to the upside aggressively. It has been moving to the upside aggressively. Gold has been moving aggressively to the upside. Okay. This is on 1 hour now. Let's go to daily. Let's start the analysis. There's a whole lot of choppiness on gold. Okay, you can see this for yourself now. Let's go. Let's start from monthly to the top analysis. For me, mainly seeing it on daily, gold is still shooting to the upside. It's still moving up. Gold is still moving up aggressively. Seeing it there, you can see after this corrective move. Remember what I told you about this fall? Remember there is a fall like this. It's a corrective move. Yeah, you can see that it's a corrective move. Upon a break, you trade. Now you should be on this trade on a monthly time frame. Your buyer should still be long. It should be long. Go long on more on gold. You can see when there was a corrective move like this for a very long time, what happened? It breaks to the upside. Upon it breaks to the upside, you can see this aggressive move. You can see aggressive move. Same thing is happening right here. This might still be a correction, but it's safer to trade long. So let's downsize that to weekly. Okay. On weekly, you can see more patterns, more clearer ones. Upon the break of these trend lines, you trade. Upon the break, you trade, guys. Okay. Very simple to spot. Even with your naked eyes, you can just spot. You can spot all of these with your naked eyes. You can spot these things. Break, boom, to the upside. With your naked eyes, you spot correction. In fact, gold is lit. Is lit. Just keep trading bullish. Keep trading bullish. Here are small tiny corrections for you to join. For those that want to join, okay. For those that never saw opportunities on weekly, you can still see more opportunities on daily for you to join. Right here, here are opportunities for you to join. More opportunities. All right. So we are downsizing, and currently we're on daily. Now let's move to 4 hours. See what is happening there. Boom. On 4 hours, you can see this. We just left the corrective move. Now we are on the impulsive move. Here's a corrective move. Hope you guys understand. If you understand me, drop number 2 on the chat box. Drop 2 on the chat box if you understand this whole analysis I'm trying to do. So my analysis is drop number 2 on the chat box if you understand. So you should trade bullish on gold. Okay, thank you. Thank you. You guys are getting it. Yeah, okay. Trade bullish on gold. Gold, trade bullish. That's the projection. You should trade bullish, trade long on gold. Even with that consolidation on 4 hours, the consolidation we saw on 4 hours, you can still trade it. You can still trade the consolidation once you come to your lower time frame. You know, I used to give an analogy that some people, they love their food hot, while some like it cold. For me, I love it hot. So that's the reason why I come to 15 minutes to pick my entries. Okay, all I do is I don't bother myself over the bigger move. Okay, all I try to do is I make sure I understand, isn't it risky to trade consolidation? No, it's not risky. Depend on your education. It's not risky. It's not risky, man. All I need to do now, just see this. Then you decide if it's risky or not. Now, just see. What if I've drawn this? I already did my analysis, top-down analysis from monthly, weekly, daily, 4 hours, or 1 hour. Then I pick my entry on 15 minutes. Now, just see this whole analysis. This is a consolidation point, right? Here's a consolidation. You agree? This is a consolidation point, right? Why? You can still trade and you make money there. That's what I do every day. That's why I still have trades on GBP USD, Euro USD when other people are complaining that there's no trades. That's all I do every day. Now let me show you just this simple secret. Now upon the break, guys, I trade. Here is another one. Here from here to is a trend line there. Upon the break, I trade. Here's another trend line. Upon the break, I trade short. Here's another one. Just connecting two highs. Upon the break, I trade long. Now here's a breakout of the whole move, a breakout of this whole big move. Then I wait for correction here. It breaks to the upside. Continue to trade. Now let's say you miss this first opportunity, no problem. You shouldn't miss this one. This one is forming here. Do not miss it. Is it risky? No, it's not risky to trade that. Just understand, like here, it's not risky. Now let me just put a trend line and take you to the downside 15 minutes. You see the entry point yourself. Now, boom. Okay. I'll just draw my trend lines here on 1 hour. Then we'll go to 15 on 15 minutes to pick up my entries. Then you decide if it's risky or not. Trust me, your answer will be different. Education is a key here. And let's go to 15 minutes. You can see on the 15 minutes, there are a whole lot of opportunities. What you regard as consolidation on 1 hour, 15 minutes, it's a trendy market, trust me. So that's why this market is crazy. There are different ways you can look at this market. Okay, now you can see what we drew. This was a huge consolidation on 1 hour, but you can still take this as an uptrend on 15 minutes time frame. You can see this an impulsive move, this is a corrective move, right? Okay, this is a corrective move. We've got an impulse here, impulse. Here is an impulse. Okay, this is a corrective move we just spotted. Upon the breakout of this corrective move, what do? You trade what? Bullish. You enter trade upon the break here. Let me show you simple stuff. You enter upon the break here, place your stop upon the recent low, then you target exact same move from here. You clone it and you put it here.